Finally, hey, welcome to Options Weekly Forecast, where we map out your week with the best trades for you so that you can make some money doing this thing, man. We're going to get the Webull chart up here. We're going to start looking at some plays. We're going to start on the SPY. Interesting day, did hold up. We're going to walk through that, give you some price targets, look at what we think our bull and bear scenarios are, and map out a trade for each side of the coin so that you don't ever go into this unprepared. Then we're going to go through a couple other charts that I have teed up that I think are going to be exceptional over the next couple weeks. And then finally, we're going to wrap up with a quick game of smash or pass, where you give me the tickers you want me to look at, and we look at whether or not it's time to go long or pass. You smash, you're ready, you pass, you're not interested. So if you want, start thinking of those tickers, start dumping them in the chat. One per post, one per comment, but 3 per person. So feel free to take advantage. Let's get this set up here. Let's get this ready to go. So we're going to start with the SPY, as always. You know, it's my favorite. We always got to get in the SPY. It's one of the most fruitful options trading instruments. So we're going to make sure that you know exactly what the trades are so that you can make them. And then we are going to dive in. So let me pull this up here. So this is how the day finished out. So ignore all these lines. I'm sorry it's a little messy. We have been mapping this one out for a few months now. With excellence and precision, I might add. Today was a little bit of a bullish neutral day. So we held up. We are below trend. Now, where do we go from here? So this is the weekly view, right? So a weekly view is very important. The longer time frames are more important to look at to get a better understanding of the overall direction, which means those of you doing long-term trades or swing trading, that's going to be the time frame you want to keep at the top of your list, because when you get into the shorter time frames, that volatility can fake you out, scare the hell out of you, and get you out of a good position. You don't want that to happen. So when we zoom in a little bit, right, we started on the most zoomed out view that we're going to go through today, which is the weekly. We get into the daily. When we look at the daily, we're zooming in a little bit, right? So we're getting a little bit of a closer picture of the here and now. And what I'll tell you right now is we've mapped out this support, which held up delightfully right around 443 on the dot. So these lines were already on the chart. This is how the price played out today perfectly. We mapped this out because it was roughly the top of range back here. We had almost a sell touch here. We didn't get it. But most importantly, we had a big support touch buyer's day here, and the sellers took it over from here in the past. So meaning this is a pivot point and this is a pivot point. I like to keep this very simple so you guys know exactly what you're doing. I don't want you wasting time chasing around ghosts and hoping that putting 300 lines on a chart is going to somehow make you better at this, because it won't. Keep it simple. Horizontal ranges are the way. We've been trading this way all year, and that portfolio is up about 105% to date based on the picks that I've made and the alerts I've made on this strategy. It's been exceptional. So this is our current range, right? This is the top, 445.94. Call it 446. Make it easy, right? Then 443 is the bottom. So $3 range that SPY is bouncing in between. Once we break below this range and close below this range, right? So it broke below today, but the buyers pushed back up. When we close below this range, we have some downside ahead of us. And boy, if we are not going to trade it. So if we break above this range, then we have a little bit of upside, ahead, a little bit of ascending resistance here, this line that you see my mouse following. But nevertheless, that's our bull scenario. Let's go into it and see which is more likely. So if we zoom in even closer and go to the hourly, we see that we pushed to a high of 449.89 and then sold off brutally on last Friday's market session into this support right here. And then we picked up mid-morning and came back down. Looks like buyers came in. Remember, we always want to have an idea of what the volume looks like, because that is how we know how confident we could be on the moves that we see on the chart. So for example, the price action tells you kind of what's happening, and the volume tells you how much can I trust what's happening, right? Because imagine you have a huge, let's take a step back. You have a huge bullish breakout, right? But on extraordinarily low relative volume, meaning the volume today was much, much smaller than it was yesterday, right? But we had a huge break to the upside. I am not trusting that impulse up. That could be a spread issue. It could be a million different things, but I'll tell you this, at the end of the day, it's like getting a piece of information from an untrustworthy source, right? And that untrustworthy source is the volume. So when the volume is strong, it's giving you an indication that buyers and sellers are fighting in that market, and those are stable price points to look at. So when it hits support with a ton of volume, it's probably going to maintain its support. If it's resistance with a ton of volume, it's probably going to maintain its resistance. But when it's extremely low volume, you just can't trust it. It's like somebody you always know gossips and they make stuff up. Low volume is basically them telling you a story. You could take it with a grain of salt. However, when someone you trust very much so tells you a story that they experienced firsthand, you trust it a lot more, right? That's big volume. That's greater than average volume. So if we look at yesterday, okay, let's zoom out a little bit. This is the hourly chart. So this is the volume down here. Here's what we're looking at. How high did it go? Up to 22 million on one of those hourly candles, right? So that means in 1 hour, 22 million shares are traded. So looking at Friday, 9:15, that volume is significantly higher than really any of the days of the past week. And then when we start to look at this overall, we're seeing a lot of very tall red candles here, right? Which means large selling. The last time we saw big boy buying was when we were trading way down here at like 430, right? 430 to me is going to be a pretty critical and stable support point. It's the pivot point we were watching for months. We predicted this breakout, right? We predicted this breakout perfectly. Let's zoom out a little bit to just give ourselves a little credit here. We came down as low as about, 342, right? Remember, we were watching 430. That's why this white line just around 430 is there. That was our long-term pivot point for us to determine whether or not it was time to take a long-term swing position on the upside or whether we're going to come back down overall. So I'm talking that's a bigger scope, bigger view, larger positions, right? More money to be made. So we nailed that. So going back to our view here, we could see that I would say net sellers win over the last week or so. These big red candles are telling us that net sellers win, right? Especially Friday. Friday was, I would say, statistically significant and outside the mean, right? So you look at the middle ground, right? It's right around 7-8 million per hour. This was 20 million, 20 million, 21 million in 3 hours, right? So roughly the equivalent of like 2 or 3 of these candles, 4 of these candles combined. So in half a day, what we saw here in half of an entire day, we saw in 1 hour here, which means the sellers came out in force. They came out very strong, which means we could trust that this rejection and push down off of 449 is trustworthy because the volume's there, right? So that means that that's a pretty pivotal supply point, right? So when supply is high, that means it's very difficult to break through, right? They just keep selling into the buying volume. The demand has to overwhelm the supply. This is the economics, right? So the same thing is true in the stock market. The demand didn't overwhelm the supplier. Quite on the contrary, the supply dramatically overwhelmed the demand, pushed it down. So we bounced at about 443, right? Okay, great, awesome. We got rejected when we tried to push up off that 200-day EMA, that yellow line here. You can set these up on your chart. This is something that I use every time, which is the 8-day EMA, the 13-day, and the 34-day, and then the 200-day, right? You're just watching them cross over each other, and you use them as little kind of anchors to understand where we're at relative to price, right? So, oh, my neck hurts. When we bounce off them and come down, we know we're hitting resistance. When we bounce them off and go up, we know it's support, right? So those are used for more intraday trading, but they're good to have. This one is for longer term trades, right? This 200-day EMA, we're trading below it, we're going to be bearish, right? So we're holding above 443. That is our support, has to hold. If we break, so this is scenario number one. Sorry, other hand. This is scenario number one. This is our bear scenario, right? Because we're closer to the bear scenario than we are to the bull one, right? So if 443 does not hold, here's what we're going to do. We're going to be looking at 441 puts dated at least 2 weeks out. So let me pull this up here so I can get an idea of what that cost will be on those puts there. So we're pulling up the SPY. Let's look at the options chain. I'll pull this up for you just so you guys can actually see what I'm looking at here. So you can see this is just, we're just going to do some Robinhood. It's simpler, easier. So we're going to go to the expiration. We are going to see how much time we want. So first, let's look at the SPY and let's see what these moves look like, right? So that's a big one, right? 443 when it pushed up, hit 452 within 3 days. So that's it's about a $20 move in 3 days. That's a lot. So we're going to go down from there. These are pretty consistent, right? So 443, 449. So $6 move per day, right? So typically there's a few $6 moves on this coiling down that we can estimate that a $6 move in a day is not unrealistic, right? So a $2 move should be able to happen in a few hours at the very least, right? So we're going to trade this safe and smart. 441 is going to be our next point of support that we really need to see hold if we're trading puts. So if we give ourselves, say, October 2nd, 14 days from today, right? And we go to puts, and then we go to the 441 puts, bada bing. Look at this. So delta's decent. Theta isn't going to completely destroy you. These can be swung. Applied volatility extremely low. However, open interest is 0. That's not a good sign. So we can't look there. We need to look at a different date. When we don't have any volume there, that's going to be a huge problem. So here we got some open interest on the October 6th. That's 18 days out, a little extra time, which isn't bad, right? So the open interest is okay. Volume was low, but okay today. So that's what we'd be looking at. So when we go back to the chart here, right? Let's pull back to the chart, back to the chart, back to the chart, back to the chart. So when we go back to the chart here on SPY, right? If we break below 443 here, then we are going to be looking at those 441 puts dated October 6th. Someone could type those in the chat for you. They're currently trading. We'll add those to the watch list so that we can keep a close eye on how they're doing. Okay, our calls were neutral today. Let me pull this up. Go to the watch list. SPY 441 put. Okay. So let's look at 1 month. These are trading up to about 350. They traded down to like 179, 293. Okay, they're currently trading at about 315. So we could expect to see 330, 340 on these per contract, which would be about 10% return. And if it goes further than 441, that's our target, right? These are 441 puts. So we want this to go, the stock price to go down at least to 441. It's possible that it goes lower. I wouldn't like to see that. And it looks like the top of range here is right around 441 and a half, which means that was our past resistance that we needed to get above. And since that broke and held, that becomes our support. So we want to basically trade this smart, trade it effectively. So we're looking at those 18 days out. We're looking at this 441 puts. Should we open neutral? Right. I'll draw this out for you. I know that's fan favorite here. It's easier to follow. So if we just continue trading sideways and we open and bump our heads here again, 444, and we come down to 443, and then we break down, what we'll probably see the next day is a push back up to test 443 and then probably finish right in the middle around 441. So here's what we do. So if we come down and we trade down and we break below 443, then we're going to be adding those puts. If the price booms back up and holds above 443, we instantly close, we cut our loss, and we'd be done with it. At which point then we will be looking at calls, right? So if significant volume comes in and this holds at 443, then we're trading the upside. If volume comes in and we break below 443, we're trading downside. So that's the bear scenario. Let's look at the bull scenario. What do we do there? So to illustrate this again, we have this range between 443 and 446 roughly, right? So on the upside, what I would say is we'd probably be looking at 445. I think that's reasonable. So if we're looking at, say, if we're looking at the 445 calls, right? So go back to the options chain. Let me look at that same thing. We'll do like 18 days out, right? We're looking at calls, 445. Those are, trading a bit higher. Delta's quite a bit higher. So it looks like money is tilted to the upside right now. We are going to be looking at the 445 calls on the 6th of October. What you can do is you can buy, and I'll put this up there so you guys know what I'm talking about here, because I think this makes it super easy for you guys, just to make sure everybody knows what the hell we're talking about. So if, for example, we were looking to open a spread, if you don't know what a spread is, it's just a way to lower the cost and your risk when you're trading options by buy call October 6th, 18 days out, 445 call. Say you click buy, shows up here. Then you hit sell, and now you'd have to have advanced options permissions to this. But I would probably sell the 447, and here's why. So if 446 is our point of resistance, right? We're basically making a trade to that point, taking our max profit there and cutting our losses. Because if we try to shoot beyond that point, we're going to shoot ourselves in the foot, because we know with conviction that the likelihood of us getting there is pretty high. Breaking beyond there is much lower. So if 447, the price of SPY, lies beyond that line, right? It means the likelihood of hitting it is statistically lower, because resistance is 446, right? If we sell the call just outside of resistance, the likelihood that that call will depreciate faster, and it will, than the 446 is much higher, right? Which means you're going to capture much more of your profit, even if you're opening a spread, right? So here's what the spread does. You're buying the 445 call, you're selling the 447 call. You lowered your cost from $477 per option to a 1.11, which is $111 per contract. So you've lowered your risk. It's fixed now. That's the most you could lose, and we don't want to get into that game of holding these to zero. But it's the most you could lose. If you have a smaller account, you can now take this trade, a safer trade. A lot of people, the biggest mistake that I see people do with smaller accounts that are trying to learn to trade options is that they take much riskier options trades because they're a lot cheaper to take them, right? To buy a call that expires today is a hell of a lot cheaper than buying a call 2-3 weeks out. Why? Because the likelihood of it hitting is way lower, and its value, because of the theta, right? It's just basically time decay, right? So on all these options, there's something called theta. It basically decreases the value of the options contract day in, day out. It means it's depreciating asset, right? So if that's working against you and theta is at its peak, right, the closer you get to the expiration date, it's basically like if you eat food that's right near the expiration date, the likelihood of getting sick is a lot higher than should you eat it right when it's fresh, right? Same thing's happening with these options, right? So if we're buying options that expire tomorrow, the likelihood of them expiring worthless is way higher than, say, 2-3 weeks out, right? We're buying ourselves time over everything else. So that comes with a price, right? That's why those are more expensive. But if you open a spread, like I showed you here, then you can get that same time value while lowering the cost and your total overall risk. So that's an option for those of you that don't want to take the risk, or maybe aren't as savvy with options or trading in general, to not lose as much, right? So looking at that, I would say that that's our bull scenario. So let's draw it out and see what it looks like on the chart. I think the same open is there, right? It's either a low open or neutral open. Test support. This would be the buy on the support test, right? And then push up intraday, and then the next couple of days, I think we're going to probably trade neutral for a while. So like we might only hit 445, right? And that's okay. If you're up 10, 15, 20% on these, cash in, take your profits. Best case scenario, it hits 446, hits that resistance, right? And then comes down. I think SPY is going to be range bound. So this trade only really makes sense if you're buying it off the bot. Oh, you can't see my Webull chart. So let me get right in there, fix that. Sorry about that. So here's what I drew out. So I think it's the same neutral open, test support, push up. Then the next day, probably open neutral again around 440s, 444s. And then best case scenario, push up to 446, our resistance, right? We are probably going to be stuck in this range for a little while, and I think that would be a good thing. I think there's a lot of fear and uncertainty in the market at the moment, and so I think this range would be a pretty safe place to rest our heads at night while we watch this develop. Now, if you look a little bit lower, you see this very, very thick blue line. That is our long-term trend support. I think what's going to happen is we are going to just trend in this range, maybe go slightly above, slightly below, until we hit this long-term trend line right here. I think that's the most likely outcome for the market as it stands, right? Sellers came in Friday and really made a stand, pushed price down significantly. So that's something to always consider. So other than that, I think that those are two really appropriate scenarios that make a ton of sense to me. And I think that they're very smart and well executed trades should you follow them as they were laid out, right? And so for those of you that are in the Discord, make sure you join, because we're walking through this stuff every damn day. Trading live, free education. I think there's over 50 free classes now. If you're not in there, make sure you get them right here and right now. Link is at the bottom of the screen. So moving on, I want to pull up the Netflix chart here. And basically state my position that we're done here, right? So this is our long-term trend support. We alerted this at $200. So here's where we bought in. Right when we broke out right here, about 195, 200, we bought this breakout right here, and then we bought again when we tested support around 245. It went up to $500, damn near 486, right? So we doubled our money on that trade. Great trade for equity. That's you can't beat it. Right now, we are converging with the 200-day EMA. I do think we're going to hold and find support here, but should we not, I think this thing is going to come back down to probably the high 200s, and I just don't want to be stuck in that trade when I've made so much money on it thus far. So that's what I think is going to happen with Netflix. That's what my personal strategy and take is on Netflix. So if you have a different one, I'd love to hear it. If you have a differing idea here, but shalom. Oh, you're doing Nick. Oh, I see that now. The nicknames. What the hell? Oh, man. That's fantastic. I'm only here so I don't get fined by the market in bad trades, but not knowing what's going on. All right, cool. So that's what I'm going to do with Netflix. Let's take a look at this bad boy here. Absolutely nailed it. Unbelievable. So here's what we did, and here's why it was genius. Okay. And yes, I just said what I did was genius because it was. We identified that a firm liked to move in these price increments based on time. Very simple. So what we did, is we mapped out these different increments of time, right? And we mapped that we basically found out that over 42 days, it likes to move 100% plus. So what we did, this pushed up, came down. We found this support test right here around 13, 14 bucks. We mapped this range out and determined that, okay, if it holds its support here, this thing, if it goes where it should, it's going to move about 100% to the upside. As you can see here, it absolutely did. We hit 2563. Those options are up like 200 something percent. The equities are up 100%, just about. Huge buyers, absolutely booming. We nailed this trade. It made so much sense. Our next target would be 31.16. If you haven't taken profit yet, I absolutely would. You don't want to carry more risk than you need to, especially when it's free money like that, guys. Free money. We nailed this trade. When you when you take the time to map out a trade or any decision in life, you're setting yourself up for success. And there's two ways to succeed. Say the trade doesn't work out. Oh, you might be thinking to yourself, well, that's not a success. Let me tell you why it is. Even if the trade doesn't work out, because you've mapped the trade out so efficiently and effectively, your risk is very small compared to what your reward was going to be, right? Because you wouldn't have taken the trade had you thought the risk was super high and the reward was very low. You wouldn't have done it. So because it was a well-defined trade that you knew how to execute, you took all of the stress and anxiety out of trading. You made it simple, very simple. You mapped out a firm. We said, hey, it moves over 42 days. It likes to move 100%. Okay. So we know what we think is going to happen, and we also know where to cut bait because we know the point in which if we break it, basically we know that if it goes lower than X price, it's not going to move that 100%. It's going to go lower. Or if it moves 100%, it'll be downside. So we knew where our trade would and would not work out. And because we mapped it out so well, we crushed. And it was so easy. Because if you map out a trade, you have achieved and mastered 99.5% of trading. The other 0.5% is just kind of the natural nature of watching your money go up and down, right? But you've taken 99.5% of the stress out of trading right then and there. There are no decisions to be made. You can automate this. You know where the support is. If it breaks support, it's going to go lower, so you're going to lose if you're long, right? So you can just set that automatically, never worry about it again. Either works out or it doesn't. There's no decision to be made. There's no stress to be had. It's the point I'm making here. And if you look at this trade, it was mapped out, understood, and projected, right? Perfectly. We knew exactly how long we needed it to expiration. We knew how long we were willing to wait for the trade to plan out. We knew exactly where we were going to buy, right? This 1459. We knew exactly where we were going to sell, basically anywhere above 20. All we had to do was wait for the trade to play out and then let the order execute, take our money, and go home. If trading is if trading is an extraordinarily stressful thing for you, then you're not doing it right, because it shouldn't be. If you're taking the time and you're taking it as seriously as you should, because it's your money on the line, and hell, if you do this right, you're basically installing an ATM in your house that has no fees and pays you every day. If you do this right, there should be 0.05% stress involved, because you've removed the other 99.5% by mapping out the trade before you even took it. So let that be a word of caution. Not even a word of caution, but just an insight that hopefully go, oh, wow. And just so you know, it's not fucking some sort of spiritual wisdom. It's no. If you hear something that you go, oh, yeah, that makes sense, it's because it resonates with you. And if it resonates with you, it's because you already knew it was true. You just needed somebody else to say it out loud so that you could recognize it. You did the work. You recognized it in yourself. So congratulations. You've just enlightened yourself, if any of that made sense. And I'm proud of you. Good job. So that trade made a ton of sense, and that's why. So going through a couple quick ones that I know people have asked about. NVIDIA, okay? Huge poopy move today. But buyers came in force, pushed us back up. So what I'm going to do before I sell them, we're up like 1,500%. These options are crazy, right? And equities were up like 100-some%. It's madness. So, and if you miss that trade, like, don't panic. Like, if you're not a member, definitely join, because then you won't miss any. But if you are a member and you miss, like, don't panic. If you haven't noticed, and you followed me for 3 or 4 years, I've been doing this, almost 5 maybe, you've seen me do it over and over and over and over, right? So you know there are going to be more. You know it's going to happen again. Don't worry about the one you missed. Worry about the one that's going to hit next. So, and make sure you're prepared for it. That's the thing. As I'll get a lot of people, it's like, oh, the trade made so much sense, but I had no cash available. Well, that's part of your responsibilities, to have the cash available for when the trade makes sense. And you tell me, oh, it fit my trading plan. It was good. I don't have any exposure to the tech sector. It would have made a lot of sense for me. It was a swing trade. I'm good at those. But then you can't take it. You shit the bed. Don't shit the bed. Make sure you have your affairs in order, right? I can only give you the roadmap. You still have to execute. You still have to hit that button and make that decision. So make sure you're prepared to do that, so that when the plan comes and God touches your forehead and says, here's your money, you can receive that call and get that reward and benefit that comes from it. So NVIDIA, huge buyers today. We're going to watch and see how this pans out. I'd like to see it hold above 437. It looks like that's going to be a pretty critical period. So we did have huge buying here before and also right there. So what we want to see is, we want to see us go no lower than 422. Buyers were pretty strong there. As long as they do, they'll come back above 452, and then we'll see how it pans out. But right now, I'm not really going to touch it or mess with it. I'm just leaving my position open with that in mind. ROKU is another one I know a lot of people were asking about. This was a well mapped out trade. Now, didn't execute the way I wanted, but you win some, you lose some. Remember, we were buyers down here at the bottom, we were sellers at the top until it broke out. Then we're buyers for the long term, and it ran to $100. So basically, we bought breakout $67, and it ran to $100. So that's almost like a 50 to 70% profit. Those options are up 100%. Huge trade, big win, awesome. So looking at ROKU, how much do we trust this move down here? So I just walked you through the volume piece. Let's hear from you guys. I want to see if you know what you're doing and if you're listening to what I'm saying. This nice little descending sell side volume that we saw over the last couple of days, sell side price action, right? How much do you trust it looking at this volume? Read this volume for me and tell me what you see. I want to hear your opinion and your thoughts to see how much you guys have learned and how much you're willing to participate in your own future. Which I hope the answer is a lot, because if you're not, then what are you wasting your time for? Everything's here for you to succeed. You just got to make the call and say, I'm ready. So if you can, please take a quick look at that. What do you see on that volume? Let's see it in the comments. Come on. What does this volume tell you? I'll wait in silence. Any takers? Come on. What does this tell you? Feed me. Tell me. What does this price action tell you? Come on. Heading to the downside. Forget the RSI. What's this volume telling you here? Do you trust this volume is what I'm asking. That's the question. I'll give you a little hint. Or how much do you trust this volume? Let's look at the daily. How much would you trust this volume? And look, ironically, where we're trading, right? Do you see why we map out these horizontal ranges? Do you see how beneficial it is to use this very, very, very simple strategy where you simply draw two horizontal lines on a chart and then you trade the moves up and down? It's what I've done all year. I know it seems like some sort of magical, mystical science. It's not. Surprise. It's something anyone can do. It's why we teach you how to do it. So it's trading in its range here. Got a top, bounce down, support at the 200-day. Look at that volume thinning out. So we're heading to the sell side, right? So price is decreasing down, heading towards support, but on descending volume, what would you typically do in that situation? Let's see how much you guys have learned. Pookie, don't answer it for him. Snowflake, you've been here too damn long. I know you know the answer to this. Come on, man. Sergeant, I know you probably know the answer to this. Come on. What are you thinking here? I would say this is pretty spot on, and here's why. If we have descending sell side pressure, right? Descending price action, so sell side pressure, right? But very, very concentrated like we see here, right? So those candles are all in pretty proportional in size, right? They're not trading in huge ranges. They're just slowly trickling down to support. Now let's go back in time and let's do some magic, right? What do we see here? What does this look like to you? Now that was into earnings, so I wouldn't put too much stock into that, right? But look at that. Push up, it just slowly sells down. Push up, slowly sells down. Push up, slowly sells down. I'm beginning to detect a pattern here. And since we are about to come into contact with the 200-day EMA, right, at least on the daily chart, which is a very good sign, it means that the opportunity for reversal trade is very strong here, very high, which is a very good thing. It would make sense. Descending volume. Now, RSI did dip to a new low while price also found a new relative low. So last time we came low, right, price came down to about $67. RSI only came to about 47. We have breached that support line, right? So we do need to be careful. That could be telling us, hey, this is a little more dangerous than it seems. But I do think that this one's ripe for reversal trade. So, Mike, let's actually write this down because, to be honest, I looked at this chart earlier and I didn't even recognize this for a minute. It is following that stair step up. So trend support would have been right around here, but we didn't get it. Let me just draw that so you can see it. So we're just looking at this most recent move. Buyers were stepping in basically on this trend line. They finally stopped. And now we're intersecting with that 200-day. So let's take this out a little bit further. And let's find our point of confluence. I would say right about there. So big buyer step up right there. That's why we would say that touch point's pretty important. Tons of support buying here. A little bit of functional resistance, and then finally, boom, it took off this trend support line, right? And it happens to be a point of confluence with that 200-day EMA and is interacting with the price right now. So basically, we're like little kids sorting through a puzzle, and we found three pieces that all fit together. We don't know the whole puzzle, but we know that these three pieces fit together. That's a good start. So I would say that this one is pretty ripe for reversal trade. And I think the opportunity is there. So like on sell side tomorrow, if it dips down and it bounces right around here, I think that's worth a buy with a tight stop. So if it breaks the trend support, you're out of the trade and your losses are very minimal. If it holds trend, you got the very bottom and you're going to get max upside now. I think this one makes a ton of sense. So that's that. Quick look at UPST pushing lower here. It is just barely hanging on at the support that we have drawn there right around 29 bucks. So we need that to hold. If it doesn't, then I'm going to kill the position and move along. Same thing though here, right? So RSI is a lot stronger on this one, right? So we're getting like that trickle sell side down. RSI isn't really playing that game, right? So when RSI doesn't move too much, but the volume, the price action does, excuse me, that's basically telling us that like we're seeing a little bit of artificial stuff going on there. Now, if there isn't volume to justify the whole thing, then we're not even going to pay much attention to it. So RSI is just telling us momentum, right? So the sellers don't have any momentum. Hell, they're able to push the price down, but they don't have the momentum to really trigger that RSI to dip, which is a very good sign. And it's also, oh my God. Yeah, I forgot the word divergence for a minute. We're getting divergence, right? That's what we're seeing. Price coming down, but RSI isn't following, right? So the buyer's momentum is picking up. The price isn't following yet, but it's typically what precedes that reversal and bounce is this exact setup that you're looking at right here. That exact setup is typically what you see. So I'm still a buyer. We've got the active alert out. If you're in premium, you have access to that. If you're not, you don't, and you should. So you should get in there. Do we have anybody new that isn't currently one of our premium members? If you are, type new in the chat. You're going to get a special gift today just because I love you and care for you deeply. So if you're new, just type new in the chat. If you're not a premium member, a lot of these people are lifetimers. They've been with us forever. So that's why I kind of have the banter and rapport that we do. But if you're new, just please type new in the chat so that way we can get you hooked up, get you set up, get you tuned up, and make you some money. So that's UPST. I just wanted to update that because there's an active alert that I was trading on. And yeah. The last one we're going to look at real quick before we get into smash or pass. So right before I dial into this, start dropping those tickers in the comments. 1 ticker per comment, but you can leave up to 3, and we're going to pound through them. These are charts you want me to quickly run through as fast as I can, ideally 20 seconds or less, just to give you a high-level overview on price action. And basically, we're just deciding, does it make sense to go long or no? Long means I'm betting on the price to go up. So short meaning betting on the price to go down. So we're just talking about long positions here. So stuff that you just want to buy and hold. So drop the new and premium. That's my guy. I like this guy. I like what this guy's about. I like what this guy's about a lot. Good stuff. Welcome to the family, my friend. Hey Tony, how'd you find us? From where did you discover us? If you wouldn't mind, I'm always curious about that. Like whether it's Facebook, Twitter, TikTok, where'd you find us? And what drew you in, Tony? What made you want to join the cult? I mean club and family, but cult. Definitely cult. A little bit of cult, but in a good way. Some cults are great. We just vehemently love. We love hanging out. We love hanging out with each other, and we love trading. So we love making money, and we love doing it together. That's a pretty damn good cult, if you ask me. But yeah, Tony, I'd love to hear that. Like, how'd you find us? Twitter? No shit. We're never on Twitter. We suck at Twitter. We're not that good at talking to people on Twitter, but I'm very happy to hear that, my friend. Welcome. If you saw the account marked Dad, that's mine. If you saw the Pennybois account, that's the Duck Man who's posted on there. I hope it was the Dad account. So I just started posting on Twitter. Anyway, welcome to the team, my friend. Welcome to the family. Dive into that education, man. You go anywhere else, you're spending $5,000 to get the education that we sell for $100 a month. So go balls deep in that stuff, man. Because if you do that for 90 days, I promise you, sorry, I know you don't. I don't know. Maybe you do like this. I have yet to meet a member that took my instruction literally. Give yourself 90 days, paper trade for 60, demonstrate week over week profitability for at least 4 weeks in a row, then start using some real money. While you're doing that, you're going through our traders, like our trade academy, basically that offers like one-on-one support, instant answers to questions. We're charting for you. All the video content is recorded. You do it on your own time. If you're going through all that and you follow those couple little rules I just laid out, I've never met someone who did that to a T that isn't still trading, has been profitable, and actually enjoys doing it. My friend Evan, case in point, he's not a finance guy, didn't know anything about it at all. He was a friend. I didn't even want him to be in the group and doing this because like I don't like want that liability. Like I don't want people I know like losing a bunch of money because they didn't listen and blaming me. It's a whole thing. So I was very stern with him and I told him, Evan, don't fuck around. For 60 days, you are going to go through our entire Traders University. You are going to do every class. You're going to show up, do all the handouts. It's just like a university education without any of the cost. You're going to paper trade for 60 days. Show me 4 weeks of consistent profitability, and then you are approved to use your own money and actually trade. He's got his like this was a year and a half ago. First of all, he turned 400 into 700 in less than a few months. He then, or 400 into 7,000, excuse me, then took the money out, did it again, 400 to about 5,000. Had 2 kids in that time, right? Had to change the way he did it. He found one strategy that works. He goes to work at like 8. He takes his lunch break at 8:30 when the market opens, 8:30 Central. He trades for 1 hour. He trades one strategy, which is day trading SPY options, right? He makes his $100 to $200 a day, calls it quits, and basically takes a bunch of days off work because he made more in that one trade than he's going to make for the whole day. So the guy has built a lifestyle around his ATM machine he's installed in his living room. So you can do the same thing. And I don't know your experience. Maybe you're very experienced. I don't know. If you are, sorry, but either way, the trading education is absolute gold. It is thousands of dollars in value given for pennies on the dollar because we know it's the most important part to being good at trading. Most people don't want to teach you. They just want you to be dependent upon them for their trade alerts. I don't want that. I want the opposite. I want you to make so much money here and feel so enriched and empowered that spending the $100 a month is pennies to you. You don't even care about it. You just stay for the community. That's my goal. So just to put that on the table, welcome. And I never mind. Let's get into it. Smash or pass, baby. Let's decide if you're hot or you're not. And if you're not, we're not gonna be interested. If you are, then let's hang out, get some coffee, and maybe see where this thing goes. We're gonna start with TDOC, one of my favorites. Absolutely very, very, very profitable trade. Very interesting company. Was range bound for a while and has basically set into a steep decline that is sending me into a deep depression that might require Zoloft to relieve. However, I will say that I have always been a firm believer in this company's long-term vision. However, I will say based on the price action right now, that vision is not coming to life, or it's at least not being reflected in the stock price. Therefore, it is with my I'm going to put the chart a little bigger so that you guys can see it. It is with my deepest condolences here, friends, family. It's just sad to say it. Uh-oh, StreamYard's jacked up. Can't post the comment. Can you guys still hear me? There we go. It's not you, it's me. Look, TDOC, it's been nice, and I love you, and I'll always love you. But I just feel like we're at different places in our lives right now, and I'm going to have to pass. We're selling off here. We needed to hold 22 and a quarter. We didn't. And I just don't love that about you anymore. And if we dial back to the weekly, we're basically going back into like $16, $17 territory, at which point we should definitely reconvene and maybe get a little drunk together. But at this point, I just got to say that's a hard pass for me. It's just not panning out the way it should. It's really, really, really. Tony, you're the best. Maybe I should say this more often on live streams because he's really going to listen. I'm really happy to hear that. You will be successful. Give yourself 90 days. And focus on the education. If your knowledge base is going up, but you're not seeing it in your portfolio, it just means you're building until finally the dam breaks, and you will see that return. Most people quit before the miracle happens. I'm not seeing it right away. Why would I pay to invest in myself? Nobody thinks about it the right way. You're paying to invest in yourself. That's the point here. You're growing, learning, and then you earn, not the other way around. People don't make it by just getting it, right? It's just not how it goes. You put in your time. You take your lashes, right? And you take your wins too. You stack them up. You see which one you like best, and you keep on grinding. This is a 10, 15, 20-year journey to have $1,000 a week going into your pocket cash, not a quick get rich. I want $100 now. If you can train your mind to see this the right way, which it sounds like you absolutely can, you're open-minded, you're willing, smarter than most. If you can train your mind to think that way, you will be as successful as they come. Because at the end of the day, all you really need is to get that passive cash flow going, depending on whatever strategy you do, right? You need that passive cash flow, just rip it in. Now, no money's ever passive. It takes some effort, but I would argue that trading requires the least amount of effort once you get going to generate an unreal return. Basically, put in a lot of effort now, and then as you go along, you put in a lot of effort now, right? Let's look at this like this. You can see me efforts here, and your efforts going up, 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 up when you start, and your profitability might go down or it might go right across, and your effort's still going up, right? Eventually, your effort starts to come down because you know enough. You have your strategy, you're dialed in, and guess what happens also? Profit starts to come up. You make money. You do less, you put in less effort, less time, and you're making more money. As long as you don't quit before the miracle happens. So that's that. I digress. So again, drop your tickers in the chat. We're gonna play a little smash or pass here. We're already playing. If you're not dropping them, you're missing out. I'm charting it for you. I'm doing all the work. Why wouldn't you want me to do that? Let's look at ARDX for Mr. Samuel Ibrahim. ARDX. Interesting. I don't know anything about this company. So ooh, I got to tell you right now, this is interesting. So trading above the 200-day, that's good. It's really made a strong push up 49 cents. We're looking at the weekly here, so we know that it's really there. Volume's thinning out a bit, but that's okay. Pretty big days right there. I don't know if that's earnings related or news related. Huge buying at like 70 cents. That's a moneymaker if you held that till then. Again, don't know anything about the company, but I do know this chart looks pretty tender here. Let's take a quick peek at what that looks like. So that's going to be your functional resistance. Call it 496, give or take. Maybe just call it 5 to keep it simple. What I do like here is that buyers, this is where they like it the most. So they like it below 350, give or take. So I would say this, that even if it comes below that 200-day, as long as it stays above 350, I'm going to say this one's a smash all day, baby. I don't know where you found this. I've never even seen this ticker before. Smash me, daddy. I think it's good. This is actually quoted from MetaMat, so that's why I put it on there. But I'm going to give this one a smash, baby. This one actually looks quite delightful and delectable, so make sure you're watching it above 350. That's like a max risk, in my opinion. I wouldn't even buy this until it hit 370. You want to see it come down a little. And then you guys see some volume trail in, and then boom, hopefully you'll get a nice push up. The gap opportunity here is huge. So if you look at this here, it boomed from $2 to 670 in the past, right? Now, I don't know if this is like an uplist situation or just absolutely boomed, but it's moved from 2 to 6 from 420 to 830 and then eventually to 9. So this makes like those big $3-4 moves. As you can see here, it dropped from 740 down to $1.60. That's brutal. You have a gap opportunity, right? All the way up to close this gap, which means the price will go all the way to where it fell off to begin with, which is $7.40. So you can basically take like a nice, almost double your money here if it holds up and pans out. So I think that this could be a quality trade that could make you a decent amount of money. So good luck. I like that one. Let's keep rolling. All right, Mike, ENPH, interesting one. I'm going to tell you right now, Mike. Boom. Pass. Look at this chart. This thing is abysmal and just sucking the life out of the market. Now, granted, it was a no-name energy company that boomed from like $5 to $3.39. So impressive. A lot of people made a lot of money. Most notably, the people selling that stock on the inside, and anyone who traded it. We traded it a few times. Again, this range was very fruitful for us. We bought at 137, sold at 223. We did it 1, 2, 3 times. That was our key support needed to hold on this range. I do think, though, you do have some opportunity here. I'm going to say it's pass for now, but you basically, wherever these buyers came in before, call it like bottom dollar, 112. I wouldn't go any lower than that. Let's see what you had on there. You wrote it out. I think bottom dollar, 112, my friend. Under 109. I'd buy I'd be a buyer at like 90, 95. I think that would make sense looking at the chart, but keep an eye on energy in general. It looks like it's trending down. So this one's going to follow right along with it. But I would say, yeah, this one's a hard pass for me. Just watch it at 112 or up. You don't want to see it go any lower. That would be no bueno. Boom, 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 boom. Let's go to ULTA. Always curious to look at ULTA. Ooh, interesting. So this one we already had range map 332 to what 417. Looks like it's playing with that range. Here's the midline 373. So look like we're getting a little bit of a reversion to the mean. So this thing boomed, right? 556 came down. A little bit of dead cat bounce. Did it twice. Now we're coming back down. I'd love to see this one hit that EMA, right? So let me tell you right now. I'm gonna say this one's getting a smash here because I think that we're gonna intersect with this 200 day. We're gonna watch that support touch, see how that pans out. But either way, it's still trending above. But I would say I'd be a buyer 380. So let's put this on our list as well because this one's interesting and this one's a fun one to trade with options. But I would say like 379, 380 is where we're gonna watch for that support interaction. That's where it's got to happen. And if we map this out too, we can see that very clearly. That seems to be what's about to happen, right? So we're trading off this buying here, which is pretty significant. That support touch would put that point of confluence right around 370s or right around 417, which we already have mapped out because we're the best. So that's what I'd do with that. And what's up, Kahinde Majeko Dunmi? I think I said that right too. I love pronouncing names that I wouldn't normally see. It's very interesting. Oh my God. On the back of those drugs. So look, we must map this one out. God damn, we were wrong. I should have bought at 450. I had this charted out perfectly. Huge breakout. Oro should have brought the breakout. So it looks like we crushed mapping that out. I just didn't trade it. I'm gonna tell you right now, because of this thing booming. Pass. Like, look, man, super hot, but it looks like you have a cold sore. It's like it sucks. So unfortunate because this thing is absolutely ripped. I mean, for perspective, in a year's time, a year and change, right? So less than 2 years' time. Let's go back and make it a year, right? Where is that? Let's go make it 2 years' time. In 2 years' time, this thing has gone up 300%. So just about a little less. So call it 250. That's a big run, especially these expressive impulses up. Those are risky business. Now, for those of you that are more skilled at taking those high risk trades, you could trade that support bounce there in the breakout. But that's not something I'd go long on right now. I just wouldn't do it. I just wouldn't do it. So let's keep going here, baby. Square, SQ, block. Ooh, this one's following right along with PayPal. Ooh. Ooh, 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 ooh. Oh. This one looks delightful. Definitely getting a smash. Look at that. Because it's right at support, and that's past range support, which means it pushed up what? 101, came down. Buyers came in at 51, or sellers came in, but buyers held up, right? Traded, came down. That's COVID crash, so ignore that. This is pre-COVID support, which I really, really like because volume is substantially greater right now than it was before. If we go to the monthly chart, I bet it'll be even better, right? So a little bit of descending on the sell side, but this was like the world's largest head and shoulders. So hopefully that this doesn't push it up to like $100 and die. But again, that's 100% upside from right here. I think this thing definitely looks prime time. We really just got to see how buyers interact with that $50 level. If it can hold there like it did back here, I would say that this one is a smash and a half. Like that's a huge buy because you have so much wonderful upside, even to the top of this small range, $15 a share, right? So 30% just about. That's fantastic. So I'm going to give that one a hard smash. That looks delightful, delicious, delectable, and everything I want it to be. And all right, I'm gonna do one more because I'm sorry we started late. I wanted to make sure we were here for at least an hour. But my kids got football, and I got to be there. Blade Air Mobility. I have no idea what this is, but nope, right there. So you're not getting head and shoulders. You're broken down. You busted. You busted. Pass. Not looking good. Not having anything to do with it. It needed to really show some strength at like 345. It did not. Tried there, got rejected, came down. And if you look right now, sellers are starting to pick up steam. I think this thing is probably headed down to at the very least 275. And if it can't hold there, you're talking sub 260, 250. I don't know much or anything really about this company. It just looks like they've always kind of trended down. So let that be what it is. And I'll tell you right then and there that that's a hard pass for me. And I would definitely stay away. Don't let your kids see it. Don't let your kids play with them. It's not good. RSI is coiling. So there's a little bit of divergence there, but I would say the risk is too high in a company trade below $3. I don't know anything about it. If we're looking at the chart, that's a pass. So as always, I love y'all. Stay blessed now.